Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
Good morning, everybody. This is Michael coming to you from GammaEdge on Monday, August 14th with our pre-market strategy session. We'll be reviewing the market structure via our web app. The charts have been posted in the PBI SPX chart. We'll also be discussing the tick from last week and anticipation for this week. And then we'll be going through a few of the stocks that are still in a call dominated state. That if we do see some turning in the tick end of week and into the monthly expiry, these may be a few of the stocks that start to show strength first in the overall market. So we'll go ahead and jump right into it with the SPX PM settled. Here we have the SPX PM settled. All expiries turned on as noted over here with the right purple tiles. We are still in a put dominated environment. Very easy to see that we are in the money and out of the money, put dominated above and below spot price. As we're starting to look through these charts, again, we'll go through systematically. The first thing we should notice is transition area, noted by the white box, 44.85 to 45.05. Next, we'll look at where spot price is. Spot is below transition, negative transition there. And then we'll look to see if we're in the money and out of the money call dominated at transition and above and below spot price. So systematically, you can start looking at these charts and gathering an idea of what the market structure looks like. The next thing I'll go to is the largest gamma strikes, and I'll look at the largest delta strikes. We have POI and COI noted red and green dots here, and then over here with the call OI. The purple shading also notes the highest OI levels that we want to look at. Also take note of those. Obviously 4400 stands out with this larger gamma bar and this purple shading here. That will be an important area to the downside. 4425 we discussed last week was an important area here on the PM settled. So below 4425 I'd be looking for a little bit more weakness down towards 4500. And I'd look for some demand to come in here as this is the largest net delta and total OI level that we can see here. Upside 4450, that lends us to some supply overhead. And then if we were able to capture that, we have 4470 and then obviously the transition area above us. So note those levels, note the net GEX here and the total OI and expected move here. Zero DTE, again, systematically we'll go through the chart for new members and existing members understanding how to read these. First we identify transition, very narrow transition, which is what we like to see to set out our if this then this probabilities for today. 44.65 is spot price as of this closing. Again, 44.50, your eye is drawn to that larger net or this larger gamma bar here. We can also note the 44.90 on the upside just above transition. So we need to get above transition for us to have any chance to move up. Again, purple shading, largest OI above us, noted here at 4,500, which consistently is a level that we've noted for the past few weeks to months on multiple expiry. So if this then this on the 0DT today would be 44.50, starting below that, moving down towards 44.25 with any weakness. We see some positive net deltas come in. This would be supportive minus any targeting that we could see on the vol D or vol U command. Again, the same to the upside. So for us to move back to the upside, we need to see these calls start, or these puts that are in the money and out of the money above and below spot price start to erode and get targeted with calls on the vol D command. And then obviously we need to note the transitions. In trans, 44.80 has been a level we've been watching for the past few weeks there. We need to start capturing that and then get above that 44.85 to 44.90 to have a positive push back to the upside. Again, that is 0 DTE. Plus 1 DTE, noted by the tile turned on over here with the purple. Again, put dominated in the money and out of the money puts above and below spot price. Systematically, note your transition levels, mark those out. If you're using the Thinkorswim or the TradingView script, those will be denoted for you on the 10 a.m. run. You can also run the $EM command in the Discord. Again, SPX is 15 minutes delayed, so make sure you give yourself time to run those and look for those. Again, this purple shading notes the highest OI levels that we'd be looking for. So again, moving up above 4470, then we have that transition area above that could cause us some supply area, and then we have 4500 and 4510. Downside, absent any targeting, I'd watch the 4425 level to the down, 4425 level to the downside, and then 4450 here. So kind of thin below where we're at spot price, absent any targeting on the +1 DTE. We'll go ahead and move into the week. Into Friday expiry here, as noted by the tiles turned on here with the purple. Again, above and below spot price. We have in the money and out of the money put dominated. Transition noted 44.85 to 44.90. That's a confluence between the +1 DTE and our narrow ZTE expiry there, transition. And again, 44.25 to the downside. 4400 becomes extremely important as the expiry for the week. We have positive net deltas coming in there. Also note this is a monthly expiry into this week, and look to see how much we have expiring for the week. So possibility that we do see some expiry and some move back up absent any increased targeting for the puts. Again, 44.85 to 44.90 on the upside. You see 4500 come in with the purple shading. Easily draw your eye to that level. We need to get above 4500. We see 45.25, 45.45, and then all this above us here. Again, puts would need to erode. You want to see these start to expire, and you want to see this filled in with call speculation to the upside for us to have the ability to move back to the upside. So as of now, put dominated in the money and out of the money puts above and below spot price, so we'd want to see that start to erode. Again, 4400 to the downside is the major demand level I'm going to be watching as you notice the positive net deltas come in below that 4400 level. All expiries turned on, combo complex here. Again, in the money and out of the money puts above and below spot price at the moment, but we also have in the money calls that are still staying with us, which is extremely important to the bullish case. Again, 4400, you'll note 3.9 million net delta sitting there. That's positive. All this is positive below. We are seeing some erosion again of these calls below us, so we'll have to see how this plays out as we move down. If these calls begin to monetize and start exposing the puts to the downside, again, that would lend this to a little bit more weakness. I believe 4350 to 4400 is going to be extremely important into this week, starting off with the weakness. If we can hold this level, 4350 to 4400, with the monthly expiry, I believe we might have an ability to at least push back to the upside, possibly towards 4500, kind of where we're targeting and looking at. Again, transition, need to get over and above that and hold above that. We've discussed that multiple times, so 44.85 to the upside and 4500. Again, all expiries, combo complex here. Landscape view, we still see call speculators above us, which is still on the bullish side, but we are in the money and out of the money put dominated, which is lending more towards the bearish case and a little bit weaker. We see negative GEX down here, just below 4400. We see negative trans here, so we'd want to get above negative trans. We have P trans here, again, narrow transition, which is good. That gives us a great plan of if this then this, and we still see plus GEX up here at 4600. So the bulls have not thrown in the towel to the upside. We'll go ahead and take a look at the tick this morning. We continue to have railroad track down on tick, so for us to be have any chance of pushing back to the upside, first we need to see this start to consolidate, start moving above the short-term moving averages. Again, as we spoke the past 2 weeks, the cumulative tick, short-term CT, has been living below the colored ribbon. This is like the first chink in the armor when we start seeing a negative slope. Again, we're starting to see the red cross below the cyan, so this is the market model turning off on the tick US, long-term market model there. Again, just telling us to be cautious, possibly be short deltas, and continue to look for more to the downside if this continues a negative slope and the red continues to expand below the cyan. Draw your attention up here to the new lows versus new highs. Again, the past 2 weeks, new lows have been pacing new highs. For any chance to turn the market around and turn the Titanic, we need to see new highs start outpacing new lows, which we are not seeing. Again, filtered tick, institutional, plus 1,000, minus 1,000. We continue to see that upper left to lower right, so continue institutional selling here and the CT continues selling below the zero line. So we need to see a total really market sentiment change in the money and out of the money put dominated would need to start to change to at least some sort of call put dominated for any chance to change the market state, and then you'd want to see it change to call dominated. You'd want to see the tick start to turn and the new highs start to outpace new lows would be the first kind of move back to the upside with any possibility. Again, ARCX, the red continues to cross down below all the colored ribbons, causing a negative slope, blue negative slope with the CT living below the colored ribbon. So again, this is a net bearish look on the market environment. More weakness possibly continue. First, only thing you'd want to see if you're looking for a market sentiment change and a price structure change would the short-term CT would need to flatten out, start to consolidate sideways, and then start to move above the shortest term moving averages. Again, you're still living below the colored ribbon, which is a negative kind of market state, and with a negative slope of the colored ribbon. Hope that helps. Heading into today, a few stocks I was looking at that were still call dominated. Again, we are in a in the money and out of the money put dominated negative gamma environment. Removal of liquidity, possible more weakness to the downside. So 4,400 is an extremely important level to the downside. Watching 4,425, below that 4,400. I encourage you to go through the liquidity stocks and look for any of these stocks that are call dominated. If we start to have a market structure change, those would be the first stocks I would go to. Short list that I have looked at this morning: Amazon, Boeing, Baba, Costco, Cisco, CVX, Google, JPM, UNH, and Visa. So go ahead and flip the liquidity stocks there. Those are all automated this morning. Again, the energy stocks last week did extremely well for us. As they were staying in a call dominated state. So we'll look for those to stay that way this week back to the upside. If we see any market sentiment change and structure change, these may be the first stocks we look to go to as they are living above 0 GEX and P-Trans. Important to look for the stocks that are living above 0 GEX and P-Trans and possibly pushing above or towards plus GEX. That is our core playbook trades. Our portfolio is P-Trans to P-GEX or 0 GEX to P-Trans. Again, we are in a put dominated state, so I would look for more weakness and possibility, again, hedging to the downside with your ETFs, inverse ETFs, as we discussed last week, TWM, and a few of the others. So hope that helps. Everybody make it a great day. We'll see you in the Discord in just a few minutes. Thanks.